everyone, my name is Chloe and I'm a Senior Research Analyst with the Research and Portfolio Management team at iFAST. And today, I have with me Ong Xun Xiang, who is the ETF Business Lead at Lion Global Investors. We'll be talking about Singapore's first active and AI-powered ETF, the Lion-Nomura Japan Active ETF powered by AI. We have heard a lot about active ETFs, and according to Bloomberg, as of June 2023, the number of global active ETF listings has increased fivefold to over 1,900 since December 2017. Assets under management of active ETFs in Asia Pacific have also recorded a 5-year annualized growth of 27%, and thus active ETFs have been gaining traction in Asia Pacific. The Singapore Exchange also announced last December that it was readying themselves for the listing of active ETFs. So can you tell us what is an active ETF and how can an investor's portfolio benefit from exposure to active ETFs compared to other ETFs currently available on the SGX?
Thank you, Chloe. So exchange-traded funds, also known as ETFs, are basically investment funds traded and listed on a stock exchange. And instead of performing deep research and investing or buying individual stocks, investing into ETFs help investors and offers investors the opportunity to build a well-diversified portfolio with a relatively small capital outlay. So there are two types of ETFs, the first type being passive ETFs and the second type being active ETFs. Passive ETFs track a benchmark index and are sometimes constrained by the index rules and methodology. And although active ETFs may use reference benchmarks for performance comparison purposes, they do not track a benchmark index and are less constrained, potentially giving it more room to outperform the market. So as an example, the Lion-Nomura Japan Active ETF, powered by AI, is actively managed using proprietary investment strategies and processes. The ETF is subject to active management or security selection risk, and its performance will reflect, in part, our ability to select investments and to make investment decisions that are suited to achieving the fund's investment objective. While active ETFs are new in Singapore, we have seen the demand for active ETFs rising globally. So between the year of 2017 to Q1 2023, the global AUM of active ETFs grew more than 3 times to USD 412 billion. Singapore investors are increasingly sophisticated and are aware of global investment trends. So riding on this foundation, we will be working closely with SGX and our financial industry partners such as iFAST to host a series of webinars and seminars to promote and introduce this active ETF. The Lion-Nomura Japan Active ETF, powered by AI, is an ETF of multiple firsts. It is Singapore's first AI-powered ETF and Singapore's first active ETF. It is open for subscription from the 5 to 25 of January, and its SGX ticker is amazingly simple to remember. JJJ. So remember, Japan, Japan, and Japan.
It's interesting you mentioned that the first active ETF in Singapore, launched in collaboration by Lion Global Investors and Nomura Asset Management, is the Lion-Nomura Japan Active ETF powered by AI. So this is essentially a Japan-focused active ETF. Here at iFAST, Japan is our top equity market pick. Can you share with us why we should invest in Japan and the reasons for the keen interest by investors in Japan in the past year?
So at Lion Global Investors, we believe Japan presents a long-term and attractive growth story for investors. So based on Bloomberg data as of the 31st of December in 2023, Japan has experienced strong performance in year 2023, the TOPIX rising 25% in 1 year alone, and this has outperformed the Straits Times Index and the MSCI All Countries Asia ex-Japan Index. We basically see 3 key catalysts for Japan as a long-term growth story for investors. The first would be corporate governance reforms. The second would be the positive impact of inflation. And the third would be the foreign investors' reallocation towards Japan. So talking about the first catalyst, which is corporate governance reforms, it traced its roots back to Abenomics in 2012, where structural reforms were one of Abenomics' 3 key policy drivers. So one significant driver in recent years would be the reform initiated by the Tokyo Stock Exchange, targeting Japan-listed companies with a return on equity, also known as ROE, below 8%, and companies trading below price-book ratio of 1. This policy change has enhanced corporate engagement, together with increasing dividend payouts and share buybacks. And since the small or mid-caps are more likely to trade below price-book 1, they are more likely to benefit from this reform. The second catalyst would be the positive impact of inflation. So as we know, Japan has experienced and maintained a multi-decade policy of low rates to drive and stimulate inflation. All these help to encourage consumption and increase lending. So all these lead to a virtuous cycle because increased consumption and lending leads to inflation, which helps improve corporate profit margins and also drive higher company valuations. Furthermore, nominal wages have also increased in response to a tight labour market. So together with post-COVID consumption and tourism, all these have contributed to increasing inflation within Japan and helped Japan exit deflation. The third catalyst will be about foreign investors reallocating back into Japan. So based on Japan Exchange Group's data, as of the 30th of November, foreign investors have bought 3,600 billion yen, approximately around USD 25 billion of Japan equities as of the 30th of November. So one famous investor who has done so would be Warren Buffett, who began investing in Japanese trading houses since 2020. He has since increased his positions in these 5 trading houses and is now a big investor in Japan, with an average ownership of more than 8.5%. So Warren Buffett rarely invests overseas. So this decision to invest in Japan is particularly significant and attractive, driving investors' attention towards Japan and also its key growth catalysts. So with all these we have said, Japan's growth catalysts are long-term and still take time to be priced in. Based on what we see now, we believe that Japan is still at an attractive entry point now for investors to accumulate exposure. Investors can accumulate exposure within Japan through avenues such as ETFs. The Lion-Nomura Japan Active ETF, powered by AI, offers investors an affordable and convenient avenue to assess Japan and also accumulate exposure within Japan.
How will you describe the Lion-Nomura Japan Active ETF powered by AI? What will the ETF track and how will it be managed? And what sets it apart from others?
The Lion-Nomura Japan Active ETF, powered by AI, is Singapore's first active ETF and Singapore's first AI-powered ETF. This ETF incorporates both AI models together with human expertise to help investors assess quality Japanese stocks. Lion Global Investors and Nomura Asset Management have collaborated together to develop an AI engine for stock selection. So this engine employs numerous machine learning and deep learning algorithms to evaluate hundreds of factors, aiming to uncover hidden gems with high capital appreciation potential. So some key factors includes valuation matrix, profitability factors, and growth factors. So with extensive data sets available within financial markets, AI models can efficiently analyze data much faster and identify patterns that might be overlooked by humans. However, using AI does not mean that all investment decisions are made solely by AI. Human experts from both Lion Global Investors and Nomura Asset Management also help to review the AI's stock selection and refine the portfolio for optimum results. So before the January of 2024, all SGX listed ETFs right now are passive ETFs or also index tracking ETFs. So although active ETFs might use performance benchmarks for performance comparison purposes, they do not track a benchmark index and are less constrained, potentially giving it more room to outperform the market. So we believe that the Lion-Nomura Japan Active ETF, powered by AI, offers numerous advantages to investors. The first be an actively managed investment strategy that uses proprietary AI models to efficiently evaluate hundreds of factors for security selection. The second will be a cost-efficient way to invest in Japan equities.
I understand that this is also the first ETF powered by AI in Singapore. What exactly does this mean, and how would AI help in the investment process, and how's the investment process like?
So we have seen the extensive use of AI within our daily lives. Just think about iPhones using Siri, Tesla launching self-driving cars. But beyond all these uses of AI within our daily lives, AI can also be used for wealth management. So by being Singapore's first AI-powered ETF, the Lion-Nomura Japan Active ETF, powered by AI, uses AI in the investment process. So using AI models also help ensure a disciplined approach towards investing, avoiding human bias and emotions in the investment decision-making process. Our proprietary AI models work much faster than humans and can evaluate hundreds of factors for security selection, uncovering hidden gems with high capital appreciation potential. So our Lion-Nomura Japan Active ETF, powered by AI, uses artificial intelligence or AI models to make stock selection and build a portfolio. So our underlying investment philosophy is that there are numerous factors specific to each company, which could indicate that they are good candidates for potential outperformance. So some key factors could be things like growth factors, valuation matrix, and also shareholder returns. However, the extent of how important each individual factor or combination of how different factors interact can vary from time to time. We believe there are patterns within the market that can indicate potential outperformance, and all these may not be apparent to humans, but are more apparent to AI models because of its ability to efficiently analyze different data sets. Our AI models also use iterative learning systems to react to the latest market changes and also inputs, responding to trends much more dynamically than what humans might. The ETF adopts a three-step investment process, using both AI models and human expertise to help investors assess quality Japanese stocks. So the first step starts with an investable universe of around 1,000 Japan-listed equities, selected based on liquidity. Regarding the second step, based on hundreds of dynamic factors, the AI models will assign scores to each stock within the 1,000 stock investable universe to produce the model portfolio. On the third step, the final portfolio typically consists of around 50 to 100 Japan-listed equities. The portfolio manager will then oversee portfolio sizing based on criteria such as size, number of shares, and volatility.
So what are some of the sectors which the investment team likes within Japan's equity markets, and why so?
So currently our model portfolio, also known as pro forma portfolio, is overweight on diversified financials and energy. So in the case of diversified financials, many large Japanese financial institutions have been active in promoting corporate governance and also shareholder returns within Japan. So one of our pro forma portfolio's largest holdings will be Tokio Marine Holdings, which may appear expensive at 1.6 times price-to-book ratio compared to its 2020 price-book ratio of 1.0. However, its ROE almost doubled from 7.5% within 2020 to around more than 13% as of the end of 2023. And when adjusted for its proactive stance in boosting shareholder returns, Tokio Marine Holdings actually looks attractive. So furthermore, based on Bloomberg data as of the 31st of December 2023, US property and casualty insurers trade at 1.9 times price-to-book ratio, while European property and casualty insurers trade at 2.3 times price-to-book ratio. So meanwhile, driven by the reforms we mentioned earlier, Japanese insurers continue to focus on reforming and improving their shareholder returns.
So thank you for the insightful sharing. Before we end, any final words you would like to share with investors who are keen to invest in the Lion-Nomura Japan Active ETF powered by AI?
So the Lion-Nomura Japan Active ETF, powered by AI, is an ETF of multiple firsts. It is Singapore's first AI-powered ETF and also Singapore's first actively managed ETF. This SGX ticker are amazingly simple to remember. JJJ for Japan, Japan, and Japan.
So thank you Xiang for your insightful sharing, and to our viewers, if you'd like to find out more about the Lion-Nomura Japan Active ETF powered by AI, you may head to Lion Global Investors website.